I want to disagree with my friend Newton.
Right.
Because if you look at it very critically, I agree with him on the fact that this bill is focused more on the indirect taxes, apart away from the direct taxes.
Right.
Unlike last year's Finance Act, which was more on direct taxes.
Right.
But you see, why is that the case? I strongly believe it's because there was no, or rather the chances of going more on direct taxes were lower this year because most of the items had been exploited last year.
Right.
Then they came in this year and said, you know what, let's now go in for this other side. And that's how indirect taxes have come in. And that's why you can see that the focus is more on the consumption taxes. Now, and I like the question you asked, Newton, that now that employee who got a hit last year, the disposable income was lower.
Right.
This year, you're now saying go pay taxes under the consumption tax. So indirectly, we're saying we attacked you last year, we are now coming for you here.
Right.
The argument that, of course, we need to raise money, and I agree, we've got to raise revenue as a country for us to be self-sustaining.
Right.
But again, have we really spent time to build our economy?
Right.
Because if you go back and look what has happened previously, is that there was deliberate moves to build the economy so that once you build the economy well, people will be in a position, will have the ability to actually pay taxes. If you are attacking manufacturers, these are the same people who employ Kenyans. These are the same people who give them an income to go spend. So what happens when manufacturers move out of the country, you lose employment.
Right.
When people lose employment, you do not have people to actually spend and pay you consumption taxes. So there's that ripple effect. We need to be very careful. And we've seen in this bill where it has been heavy on VAT and also excise tax. If you look at excise tax, for example, you are telling a manufacturer that they are deleting the section 14 of the Excise Act.
Right.
Which gives people a leeway, manufacturers a leeway to claim back the excise tax they pay on raw materials.
Right.
Now that is being deleted. So what that means, as a manufacturer, I will pay excise tax on my raw materials, then I'll go ahead and charge the consumer, but I have no way of recovering the input, the input excise tax. So that means, as a trader, I'm now bearing the brunt. So we are becoming uncompetitive.
Right.
How are we then building the economy? How are we ensuring that we have a secured future for our taxes, so to speak? I could have expected that we encourage manufacturing, we encourage more investments in the economy. That way, we're going to build an economy that has got money. However, speaking on the disposable income, there's a bit that was done, which was good, which ensured that we actually have more disposable income from the employees, although a little bit, because last year we made a lot of noise about the housing levy, and then a little bit we had SHIF coming in. So those two are now tax allowable. So in